All right, welcome back, gentlemen. So, the investor's window of opportunity, it certainly is opening. And as we look at data, what does the buyer behavior sort of tell us about what the market looks like going forward? What does that look like?
Yeah, I mean, on auction.com specifically, we have this really rich buyer behavior data set because people are bidding on properties in real time. And so we can see what they're willing to pay and how aggressive they are in bidding. And what we're seeing is that there was a pullback in this last 6 months of 2024. Our buyers started pulling back on what they were willing to buy in terms of quantity and also what they were willing to pay in terms of price. And that indicated to us that they were uncertain. It might have had to do with the election a little bit, but they were also uncertain about the early 2025 market because when they're buying in late 2024, they're returning that inventory to the market as retail inventory in early 2025. And so that indicated to us that there may be some slowdown in 2025. Our buyers often lead the retail market. And so that's what they're telling. Now that those numbers bounced back at the beginning of this year a little bit, but they're still not back to what I would say is the beginning of 2024 levels in terms of what our buyers are willing to pay. They're still being very conservative in that, and they're being more selective in what properties they purchase. And so that leads me to believe that the retail market is in for still a little bit of a rough time over the rest of 2025 in terms of prices and sales volume because of that buyer behavior.
As usual, Jeff, Darren is spot on with everything. It's kind of scary and
You
also
don't always say that.
also kind of annoying for me because I like to be the one who's spot on with everything. But if you look at what we've seen in our RCN investor sentiment survey over the last 2 quarters, we came off record high levels of optimism last year to the lowest readings we've seen in terms of investor optimism and market outlook in our more recent quarterly assessment. It's not that everybody's negative. There's a split of about a third of investors believing things are going to get better, a third that they'll stay the same, and a third that they're going to get worse. That's a very different mix than what we've had in prior quarters when we had a lot fewer people expecting things to get bad and a lot more people expecting things to improve. And the other point Darren made is actually playing out in the market today. If you look at existing home sales, as reported by the National Association of Realtors, we've had 3 consecutive months now, February, March, and April, where we've sold fewer properties than the prior month and fewer properties in the prior year. April numbers were particularly disappointing. We're down to about a 4 million annual sale number, which would be the lowest number we've sold since 1995 when there were 74 fewer million people in the country. And home prices are going up at lower and lower rates. So those predictions that Darren's making based on what he's seeing from auction.com buyers really do tend to be playing out in the broader market.
So, when we think about investors in the marketplace today, and Rick, you nailed it, right? There's negativity out there. Darren's data is backing it up. How do we frame the opportunity from a distressed perspective, right? Like today, we've been talking a lot about the potential for foreclosures. Numbers are ticking up, still well below traditional trend lines. When we're talking with investors, and there's a large number of investors that follow this podcast, how do we explain to them what the opportunity is right now in the single family home investing marketplace?
Yeah, I would frame it as this is an opportunity to go against the grain a little bit, and especially with distressed properties, there is built into that a value add opportunity. And so there's this opportunity to go in and purchase when the market's a little bit scared and potentially have some more negotiating power. We're always talking to our sellers as well, the servicers who are selling these properties and other even private sellers to listen to the market to adjust their pricing. And so I think it's an opportunity for investors to go in and purchase, especially a distressed property at a discounted price and there is probably going to be a rough patch here in the retail market that's going to make it tough for them. But because they have that built-in kind of value add opportunity, there is a little bit less risk. But I think our buyers are telling me is they're very interested in inventory and in distressed inventory specifically, but they're being very disciplined in their pricing, what they set their price at, and more conservative than they were maybe a year ago.
Yeah, just to echo what Darren said and broaden the conversation a little bit, um, I think there are a couple things to focus on if you're an investor. One is if you're looking for distressed inventory, and we've talked about this a lot, fish upstream. Don't be waiting for the bank repossessions, the REOs, because they're still running at 39% of where we were prior to the pandemic. They're not likely to get up to pre-pandemic levels, more likely for a couple of years. Um, Darren's mentioned that the number of properties being actually auctioned off at foreclosure sales is still lower than 50% of where it was pre-pandemic. So you really need to be reaching out to those distressed borrowers much earlier in the process because they have the optionality of being able to sell their house. Increasingly, there are going to be short sale opportunities. So if you're an investor, try and figure out, kind of refresh your memory on how to execute a short sale, how to negotiate with the lender to get one done, because we are starting to see, particularly recent loan vintages, people who took out low down payment loans in markets where prices have receded, are suddenly underwater on their loans. So there are going to be some short sale opportunities. There are probably more opportunities today for both inventory overall and distressed inventory than we've seen in a couple of years. Inventory of homes for sale is up about 33% year over year. The number of delinquent loans and loans in foreclosure are up just marginally, but they're up. And we've seen demand weakening from consumer buyers based on the number of days on market it's taking to sell a property and by the median age of home buyers. According to some research from John Burns, the median age of a first-time home buyer is up to 38. The median age of a move-up buyer is up to 61. So it's just taking longer and longer for people to buy. And I think that's a sign of weakening demand. So a little less competition for investors who are willing to put their toe in the water. Probably a little more opportunity for rental properties than for fix and flip properties in the short term. But it's not a bad market, as Darren suggested, to kind of swim against the tide and see what opportunities are out there.
So before we wrap this segment, predictions for the inventory levels for the rest of the year. Today we focused on foreclosure, the opportunities at auction.com, both distressed and non-distressed inventory, and how we're thinking about the rest of the year, especially in the single family home market across the US. Final thoughts and predictions. Daren?
Yeah, I think we're on this trend. We're seeing inventory rise, and I think that's spreading to more markets. And so I think we will see that play out for the rest of this year. I think we're at about just shy of 1 million uh, for sale inventory if you look at the Realtor.com data that I look at, and so I think we'll continue that trend higher in inventory in more markets, and so more markets will become what so-called buyers markets as opposed to sellers markets. And that's what I see playing out, and that's going to put more downward pressure on prices. We've already seen the home price appreciation go down to under 2% in the last NAR reading, and I wouldn't be surprised to see it go even negative nationally, but certainly we're seeing those prices go negative in more markets, and I think that will continue as well through the end of this year. And I think if you did see we actually saw a slight correction according to the NAR data back in 2022, where we saw 5 months of year-over-year decreases in home prices. And if we saw something like that again this year, that actually could be very healthy for the market. The market recovered from that very well back in 2022. And so that could actually rebalance the market a little bit and balance the supply and demand in 2026.
Just fair warning for viewers, Darren's been predicting negative home price appreciation, I think since Moses was a child. So
We're long
just kidding.
overdue. Well, it was
Just
right back
kidding.
in 2022.
We are overdue. We are
Yeah.
overdue. And In terms of inventory levels, I think Darren and I are on the same page here. At the current rate of growth of year-over-year inventory, I think we're going to be back to pre-pandemic levels by the end of the year, if not sooner. More inventory does tend to slow down price appreciation. Too much inventory tends to make price appreciation turn negative, and we're already seeing that in some markets, so it wouldn't be a huge shock to see that. So I think there are going to be a lot of opportunities for people looking to buy. You just have to be circumspect about what you're buying and where you're buying it. Be mindful of some of the regional trends that we're seeing. The population migration that we've seen post-COVID has been slowing down. So we're not seeing as much growth in some of those southern and southeastern markets as we'd seen previously. Um, but inventory levels overall and distressed inventory levels as well should really move in favor of what investors are looking for between now and the end of the year.
Well said on both parts. That's going to be a wrap for us. Special thanks to Daren Blomquist from auction.com. Investors, if you're watching this today, log off, go to auction.com, check out the brand new inventory that's being listed all the time for your new investment properties. Gentlemen, thanks so much.
Thank you, Jeff.
Thank you.